Thanks very much, Deven. Appreciate you joining in and running us through all of your views as always. I mean, the market's steady, 130 points on the Nifty. Amit Gupta is Vice President and Fund Manager at ICICI Securities. He's joining us to take some questions. Amit, good to have you here. I mean, your top bet for a while has been financials, both private and public. And I'm assuming that nothing really changes, right? Since the last we spoke, the market's not done very much, although at higher levels it's shown some fatigue, refusing to take out previous highs. What's your view now?
So I think this fatigue is likely to be there. I mean, obviously, when we have spent 1.5 years now within a band, but we have outperformed the global markets, I think slowly the markets are coming out of the range now. But yes, some kind of consolidation, slow move may be there. But eventually, I think the trajectory looks upward. Because, see, very clearly, one of the weakest link in the markets was Europe. And we saw that euro was continuously falling from 1.25 against dollar. It declined to 0.97 against dollar. And we saw many negatives were priced in. The people were saying that they are not able to increase interest rates and US is increasing. Now we have seen that some part of interest rate hike of 75 bips has been seen by ECB. And before the winter season, we saw that the capacities were filled up to almost 98% in Germany and EU also. So that is where the energy prices, which were 75 euros, they declined to 30 euros. And I think this is where euro has stopped falling and dollar has stopped rising for the time being. And that is where we are at a wicket where possibly 1 or 2 months at least, markets can have a sustainable period. And you will see markets little bit moving higher. And there may be some stocks which can start participating now, particularly from the banking space also.
Okay, all right. Hi, Amit. Good afternoon. Amit, I can see Mahindra & Mahindra as part of your portfolio. We just had some news coming in on Maruti that their market share has increased a little bit in the SUV segment. That flash was just running. Then that's been the one that they've been lagging in. Their overall market share as well has moved up. From the auto pack, you all are sticking to Mahindra & Mahindra, or do you believe some of these PVs like Maruti, they're giving some scope out there?
So Mahindra is very much part of the portfolio still. We bought last year, in the beginning of last year around 600 levels. It has got doubled in the portfolio. And there have been triggers which are working in favor of Mahindra. But we also need to look at that there are, certain stocks which are at a relatively better valuations in the same sector. So market leader Maruti, I think it's coming up. Because the problem with Maruti was that in the last 1 year or so, they did not come out with any major SUV launch. And SUV as a segment is coming really higher actually in the overall passenger vehicle market share. It was 20%, now it is close to 50%. And Maruti had a market share of only 7% till July in the SUV segment. And now it is inching up. I think by financial year 23 ending, it may be somewhere closer to 14-15% at least. So this is, and you are going to see more launches from Maruti in the same segment and it will continue till financial year 24. So there may be some good period coming actually for the stock, and that is why we have included it in our ACE equity portfolio. Another positive, maybe couple of positives, maybe that the steel prices are down, so that can work as a margin accretive actually to the company. And we have seen that rupee has appreciated against yen. So they used to pay the royalty in yen, and that is going to be benefited for them because their ultimate outflow may be lower because of this forex benefit.
By the way, just take a look at some of these mid-cap IT and the way they're surging. Birlasoft 5%, Persistent Systems up 3.5%, FirstSource, L&T Infotech, Latent View across the board. You've seen buying coming through in the last 30 minutes. Remember, these are stocks which are down nearly 35-40% since the beginning of the year on the back of rising interest rates, the fall that we've seen in NASDAQ. And if the news flow on the US interest rate starts getting more benign, it is positive, at least from a sentiment valuation point of view for these IT companies, and the market appears to be recognizing it. So IT is clearly leading the way. The Nifty IT index has now surged to a gain of close to about 2%. In fact, even a little bit more in that. Amit, afternoon. Wanted your thoughts in on Bajaj Finance. That is the, one of your top bets. I think the second highest weightage in your portfolio, close to about 6%. Now, Jio is entering into the financial space, and we know Jio can be a big disruptor in whichever industry it enters. Do you think that can be a big risk for companies like Bajaj Finance?
So see, actually, if you see right now, the last year, we saw that growth was lower actually in the company in terms of AUM, but it has really picked up well actually now in the last couple of quarters. And now they are talking about that they can double the AUM in the coming, 3 to 4 years perspective. So that is something that the management actually has looked into. But yes, I understand the fact that consumer space is going a little slower right now. So it is more a luxury segment which is performing, not the mass segments which are performing right now. And that is where I think Bajaj Finance will have to start looking into that. But now 32% of the overall loan book of Bajaj is also into the housing loan, which is picking up now eventually. So it is not that interest rates are denting that much the housing movement, because we have seen in the last 2 decades or 3 decades now, starting from 1990s, that whenever inflation actually has moved higher, we have seen that housing has also moved higher. So that particular traction happens because the housing prices little bit they start moving up whenever the developer they start increasing the prices because of inflation. So it's a direct impact. So that is the same trend I think can go now, and 8 to 10 years of lull cycle has already seen in the housing. I think that is going to turn back, and you may see a good cycle now for housing. So 32% housing loan book in the same stock with the digital premise, I think that is going to be very good for them if consumer overall is not working. So for these are the two segments they need to look at: the luxury consumer segment as well as housing now going forward.
Amit, one reason why this is a broader kind of question, mid caps and small caps maybe are struggling, and not struggling, but gains have been capped, is because in December, starting actually late November, a lot of these lock-in for new listings expired, right? We're talking about thousands and thousands of crores of supply, which has come into the market, which has gotten absorbed, right? That does take away from the allocation to the to other parts of the market. Once this is done, I guess it will take time, and some of the supply will keep coming. I mean, names like Paytm, etc., very little has gotten sold. Potentially, there is perhaps more to come over time. But do you think once the bulk of this is done, things should ease up a little bit in the broader space, mid caps, etc.?
So I think you are partly right. When the bulk of the selling is getting over, obviously the fall in the stocks can stop. But that is not the only thing. If we are buying something, we need to look at the growth also going forward. And I think that will come with the profitability only. And these companies actually now they have some challenge, because when your internal accruals are not coming, and the cost of capital is going higher, the fund raising which they were doing actually before, because that ultimately they have to do the run the business to increase their market share, and that is where the burning of cash also starts happening. So burning of cash has to be stopped. The profitability has to come back. But raising of capital, I think it will be a big challenge going forward in this scenario. So that is where I think look at those companies where at least the profitability trend is there. Now look at L&T, why they have consolidated L&T, Infotech and Mindtree. There may be some synergies, but definitely this is a challenging period. And that is why the consolidation is something that is going to happen now in this industry also, possibly in the mid-cap space. So we need to wait for that. Till that time, I think you may not see a sustainable move. Possibly the large caps ITs can give you some move. It is possible Infosys from 21 times, it can move to 25, 26 times. But the premium valuations, at least I think they have shaved off because of the fear of lower discretionary expenditure. At least if we can take cue from Accenture or Cognizant outlook on the IT expenditure at least.
Amit, the play on Bharti Airtel, which is also one of your big bets, is rising ARPUs. And ARPUs already are rising. I think in the last 1 year, they've gone up from 140 to 170, 180 rupees. And the expectation is that they will continue to rise. What, according to you, is the big risk that ARPUs don't rise from here on? Because, they've had a troubled past, the industry. They found it difficult to go ahead and pass on rate hikes. So what, according to you, is the big risk for Bharti Airtel from here on?
So I think, first of all, positives are more, because 5G is going to be launched now in various circles. And that is where you will see more and more new things coming, at least from the industrial uses perspective. So whether it is Internet of Things, whether it is artificial intelligence, that is how actually I think more growth is going to come. You would have heard that Bharti is also opening data centers now separately, what Amazon has done on a bigger scale globally. So they are also looking to do now, at least from here, which is going to be in demand actually going forward. The other third part is, if you see recently what they have done in the circle of Haryana and Odisha, the prepaid price was around 99 rupees. They have scrapped it. They have brought it to almost 155, which is almost 57% increase. And these are the circles where there was more affordability towards 99. So they have taken this risk, and that we have to see going forward, that if the competitors also follow this, I think it's a win-win situation for all. If the competitors are not following this, and if they start rolling it back, then it's a trouble at least going forward. So this is a risk taken by the company, and we have to watch it now.
Okay, all right, Amit. Thanks so much for stopping by, discussing all those stocks and how you all are approaching, the fund as well. But good speaking to you and good hearing your thoughts. By the way, as we speak, the Sensex has